Hello everyone, welcome to the Tech Podcast series. This is Lakshit Pant from Azure Developer Community, and today we are here for another episode of Tech Podcast series. And we have a remarkable guest with us who has not only served our nation but has also transitioned into a financial expert committed to helping all the individuals out there, navigating them to integrate the world of personal finance. Join us for this podcast as we dive into inspiring journey of Colonel Rakesh Goyal, the founder of Let's Invest Wesley. Sir, can we start with a quick introduction of yourself?
Yeah, please. Thank you very much, and greetings of the day to all your viewers who are watching this. And as rightly brought out, I am an ex-army officer with long service background in the army. I served for almost 3 decades in the army, and after my tenure in the armed forces, I decided to help out people in the armed forces as well as the people who are not from the armed forces to manage their finances, because I realized one thing, that money is something which most of us as Indians are not very good in managing it, right?
Right, right,
And it's very important for us to have a good relationship with our money so that it can solve the purpose for which we are trying to acquire it. So
right,
that's how I started my company called Let's Invest Wisely, and we have been helping out the armed forces people for last almost now 5 years in managing their money and making their investments do good for themselves. This is
So
a
let's start. So maybe we can start from your military background, sir. If you could help us get through which corps or regiment were you a part of, and what are some memorable experiences you had in your entire tenure?
yeah. I did my graduation in engineering from BITS Pilani way back in 1985, and after doing my mechanical engineering, I decided to join the army. In 1986, I joined, and I was commissioned in the Corps of Electronics and Mechanical Engineer. This is commonly known as Corps of EME. So, just to put the things in the correct perspective, this is the branch of the army which looks after the entire equipment of the armed forces,
Okay,
and you have to be with the troops at the forwardmost locations because you have to provide the intimate engineering support to the equipment, right
okay,
where the location of the equipment is.
right,
So that's how it works out in the armed forces. And as far as my experiences are concerned, over a period of 3 decades, I had some fantastic experiences while serving in the army, which are now helping me out equally good in the financial markets.
right,
So to bring out a few of them, I'll just say a few of them. Like first being the working together to achieve the mission. You see, when you go for any mission in the armed forces, it's always a teamwork. You
right,
then of the things you dedicate the responsibility to each one of the members of the team, and then try to accomplish the mission. So
right,
same thing goes for the financial markets. You have to work out an investment plan with your clients, keeping in mind what is their requirement and where do they want to achieve, where you want to achieve in the coming times.
right,
So in mutual consultation, you work out a mission, which is an investment plan, and then try and execute that and achieve the financial goals for the clients. Second, being the discipline. You may be all aware of that discipline is the backbone of the armed forces.
right,
So discipline has taught me that whatever may be the conditions, you don't have to take knee-jerk reactions. So same thing is applicable with the markets. The financial markets are very volatile by nature. So if you are sticking to your plan, I think you should not be bothered about the short-term fluctuations in the market. And if you remain disciplined, like what we have been in the armed forces, I'm sure you will be able to achieve your target goals.
right,
Third point I would like to emphasize is the ability to stay calm during the pressures.
Right.
When I give you an example of live operations. I was part of Operation Kargil way
Okay.
back in '97, and I can tell you things can be very very difficult at times. You need to get a lot of pressure. So what matters is your calmness, and if you don't lose your cool, I'm sure you can achieve your uh, you know you can achieve your mission in the way you want it to be achieved. The same thing goes with the financial markets. If you don't react to the market volatility in the short time, you are well poised to achieve your financial goals. The next point being the cater for the unexpected situations in the armed forces. You may have planned everything, but when you actually go for the operations or go for a mission, there would be some things which would come up totally unexpectedly, which you would have never thought of. So, how you deal with that is one thing which the financial markets also teach you. Right? The markets will put you in a very awkward situations at times, and if you have gone through this kind of experience earlier, I'm sure you can handle the financial markets very good.
Exactly. So when we talk about investing, when we talk about any financial market, there has to be very, it has to be very specific because psychology plays a major role in all these aspects, right? You have to be very disciplined while investing. If you are doing a day trading, maybe so let's give an example. So when to pick up a trade, and if you are losing your capital, how much you have to invest, how much capital you have to invest. So all these things are very crucial part of the journey whenever you invest. So how has that experience helped you in putting all this together in the financial journey? I just wanted to know, and what are the best practices? And no practice can be best, but what are the practices that might have worked out for you that you want to share with other peers?
You see, very rightly, you're bringing out. It's a very, very tricky and very uh, volatile situations. It looks very simple to carry on with the investments and earn a lot of money from the stock markets. It's actually not that way. First of all, I would advise all the people not to get involved in the trading business, right? And just to put the things in the correct perspective, the SEBI, Security Exchange Board of India, who are the regulators for the stock markets, they did some study for 3 4 years and came out with a report saying that 92% of the people in the stock markets who do the trading, they generally lose money. It's
Right.
only 8% of the people who make money. And out of those 8% of the people who make money, around 25 to 30% of the money goes in the brokerage payment.
Right.
So to put the things in the correct perspective, trading will not take you anywhere, first of all. So please avoid trading in the stock markets. Only way you can fulfill your dreams is through the long-term investments. If and there are two ways of handling the long-term investments. One is if you are good in understanding the businesses, if you can read the balance sheets of the companies, and if you can have the inclination and the mindset to directly deal with the stocks, by all means go and invest in the stocks directly. But if you don't have these things and you are short of time, invest in the equity market through the mutual funds. Because why I am saying through the mutual funds? Because they have a dedicated team of people who are taking care of your investments. You are not worried about the diversification. You are not worried about the market volatility. You just, as a patient and a disciplined investor, keep putting the money on every month and let it grow. Don't worry about the market volatility. Let it
Okay.
keep moving on.
Okay.
And I'm sure if you invest for 10, 20, 30 years, you will get enough money, more than enough.
Right. So, when we talk about trust and credibility in the financial market, there, and we have to draw a parallel to the background that you have of military, right? Where you have, every troops, every tenant that you have is from some different, belong to a different region, right? So, the trust and credibility are paramount in a financial market as well. Can you share some of the insights on how professionals in the industry can build and or maintain that trust with their clients to improvise that credibility and trust in the market, sir?
So it's a very important question. So you're asking me this. You see, as you rightly bringing out, the credibility and the trust are the main pillars of the financial markets. And
Right.
when you're hiring somebody to manage your money and to take care of your investments, there are few things which you should always look after. You should always take care. First, being the credentials of the financial planner whom you're hiring.
Okay.
Right. The credentials of the person must be checked. What are his qualifications? What certifications has he obtained? And how he has performed in the past about his clients.
Right.
Right, that is very important. The credentials of the person have to be checked in detail. Second point being the trustworthy. How trustworthy the person is. How will you check it? You have to go and check the testimonials of the clients who are already getting their investments done through them and see their reviews. Today, in today's world, Google gives lot of good options to understand the reviews of the person through whom you are planning to get your investments done. And third being the transparency, right? One has to be very transparent in this market. You cannot have the process which are not transparent. The investor should have the complete understanding about the whole thing, how the investments are being planned, whether he has got the access to the investments, or he has to only go through the planner to get it executed. So the transparency is very important. And
Okay.
lastly, your gut feeling. You see, your gut feeling plays an important role. If
Right.
you think he is the right person for me to take care of my money, go ahead. If there is a
Right.
iota of doubt,
So, sir, for maybe when you said about investing, and you have also mentioned about long-term investing, for someone who is just getting started to all this investment part from a very low capital, right? What essential advice and what are the different ways you will offer him so that he can also be on the right track? Because when you start from a very low capital, the compounding is very slow, right? So, how to maybe what should be the ideal approach to start this stepping stone? What can be the first stepping stone, sir?
well, this is an excellent question which you're asking me. How should a beginner in the investment should behave so
Right.
as to get his financial goals met in the given time frame? So first of all, the compounding. What is the compounding? Most of the people don't understand what compounding means. The compounding is getting interest on interest.
Right.
Suppose you put 100 rupees in the bank and you get 5 rupees of interest or 100 rupees after 1 year. In the second year, you will get 5% interest on 105 rupees, not on
Right.
100 rupees. So it
Yes.
becomes an exponential thing after a certain given time. So the compounding will happen only when you invest for a long time. That is
Right.
the first point. And what are the points which a beginner should keep in mind while making the investment decision? First is educate yourself. It's
Okay.
very important. It's very important for a person to understand how he is putting money, where is he putting money, and what can
Okay.
be the consequences. In today's world, when everything is available off the shelf on the internet, educate yourself. It's very important.
Right.
Second point is set clear goals. Have a realistic goals in your mind that in so and so time frame I want to achieve this kind of target. If you have a clear goals in mind, you would be able to achieve them very categorically without going into much of difficulties. Start early. I keep
Okay.
telling my clients and I keep telling everybody, the moment you start earning, start investing. Maybe we fight 500 rupees because earlier you start, better is the compounding.
Right.
So just to give you an example, if you start with an investment of 5,000 rupees per month, right, at say 12%,
Right.
you would get around 3.3 crores after 30
One
years.
yes. Right. Yeah.
So that's a huge amount of money which gets
Mhm.
created, right?
Right.
So things are very simple. It's you have to only keep your heads down, start the investment, and let it work for you.
So you have when you have mentioned about the personal goals, right? What do you mean by personal financial goals? How to very how to make this very important, clear financial goal? That if you can provide some guidance upon this, how one can effectively establish and work toward these goals.
Yes, the financial goals. I would say everybody would like to get married. Most of us would
Yeah.
like to get married. So marriage becomes your financial goal.
Okay.
Right. Buying a car is everybody's desire. That becomes your financial goal.
Okay.
You know, children's marriage, their education, buying a house for yourself, they all become the financial goals. Everything costs money. So how do you get that kind of corpus in the given time frame is what you have to achieve.
That's a very nice iteration that you have given to me, sir. That's very nice explanation. Now, taking a little bit more step ahead. So you have mentioned about a couple of things. Now I would precisely say that if there exists any kind of do's and don'ts, and maybe as a personal financial advice, we could advise some of the top five rules as a personal financial advisor that individuals should prioritize to achieve, maybe some sort of success. And on the flip side, are there any don'ts that exist in the financial markets, sir?
Yes, definitely. Like any other field, you have do's and don'ts in the financial market also. If we talk about the do's, what you should be doing it, like I was talking about the educate yourself, set clear goals, diversify your investments. When I say diversify your investment means don't put all your eggs in one basket. It's a very good old saying. Diversify means you invest in different asset classes. When I say different asset classes means asset is what? Equity, the stocks is one class, debt, fixed income asset is second asset class, gold is the third asset class, real estate, fourth one. Put your money in different asset classes based on your risk profile. That is
Okay.
diversification. Don't put everything in one field. Start early, we have spoken. Uh, Early you start, better is the compounding. Invest for a long term. Like I
Okay.
said, invest for a very, very long time to get the compounding magic to work for you.
Right.
Regularly contribute. Most of the people don't contribute on the regular basis. Right? They will do it for some time, then stop it and take out the money. That disrupts the whole thing. So
Okay.
whatever amount you have decided, keep contributing it every month without any changes in that. Should not stop it. And stay patient. Patience
Okay.
is the only virtue to create wealth. You cannot create wealth in a short span of time. It takes very long time. It's a very boring business. Keep doing it, you will be able to achieve it. As far as talking about the don'ts, the foremost thing is don't do anything without a plan. Like most of us keep buying the financial products based on the recommendations of XYZ and without understanding whether these are good for us or not. A time comes when you lose the track of all these investments, and most of the time you lose money in these. Always have a plan, and then based on the financial plan, make your investments. Right? And secondly, like I was saying, don't put all your eggs in one basket. Always diversify. Do not, I repeat, do not chase the market trends.
Okay.
Don't put money in the so-called IPOs.
Okay.
Right. You must have heard Paytm IPO came at 2100 rupees, right?
Yes. Now it's something
Everybody,
around. Yeah.
everybody was running after that.
Yeah.
After listing at 2200, it went down to 450 rupees.
Yeah. Exactly.
Everybody lost money, right?
Yeah.
People invest money in the crypto. Most of them had lost money. So don't follow the market trends. Keep it simple. The more simple it is, better are the chances for you to make money.
Right.
Never borrow money to invest in the stock market.
Okay.
Bilkul. Never put your money, which is the borrowed money, in the stock market. Put only what you are earning, which you don't require for next 5 10 years. And don't overreact to the market volatility. Keep your head down. Keep putting your money every month and let it continue. You will see the results after 20 years. So these are few points which one should take care of not overreacting if you want to make good amount of money in the stock market.
So every answer that you gave me definitely have some texture of the disciplined mindset and the perfect psychology that one should have. So because having, sticking to a very long term plan, and again, not, as you mentioned, not going for the market trends, right? Like, we have seen it literally every time, the crypto market, then NFTs, the hype of NFTs, that there has been all these bearish things that came across and people lost their money a lot of times. But sticking to the basics, to the fundamentals is always the easy way to get the money and to compound your money, right? And that's the best piece of advice. And the one that you have mentioned, it's something very new and but very generic and but very true for us, that never took some or maybe to borrow some money to invest in the market, because that's not the right approach. So for every listener who is listening to the podcast, these are some best piece of advices you can ever get from a on any podcast. Now, sir, so we have discussed a lots of things in the podcast already about financial market, about the discipline, but I just want to roll it back to again to the discipline part. For my generation, I have seen this lately. In fact, for me personally as well, being disciplined is not that easy, right? Sticking doing the same work every day is not easy. Sitting there for maybe for hours in front of laptop is not easy. How would a piece of advice? And when we have so lots of distraction, like we have so lot social medias and applications, mobile phones, games, everything is there to distract around us. So, what advice you will give to maybe, and what can be the approach that will help us to eliminate all these distractions and to be disciplined, sir?
So it's a very pertinent question. In today's world of social media, you get plenty of advice without paying any money for it, right?
Right.
If you have taken these advices, I'm sure, as per the market buzz, everybody would have become millionaire
Right.
because things are so commonly available.
Right.
But does it happen on ground that way? No, it doesn't happen that way. I did some study in last 2 years. Not more than 10 to 15% of the people have made actual money, despite the knowledge available across the board.
Okay.
So the best part of the whole thing is if you understand the financial markets yourself, invest after doing thorough research yourself. Don't listen to anybody.
Okay.
If you are not fully conversant about the market behavior, hire somebody who can do it for you.
Okay.
And if you hire somebody, listen to him. Have full faith. You go to a doctor, you have full faith in him, right?
Mm.
That he
Okay.
would be able to take care of your illness. In the same fashion, when you hire some financial planner, have full faith in him that he would be able to take care of your financial requirements in the given time frame. So go to him, do whatever he says, and do it for a long time. That is the only solution. You cannot afford to buy a sell as per the market requirements. If you do it, only the brokers become rich. You don't become
Right.
rich
Right.
because whenever you do any transaction, they are charging the brokerage from you.
Exactly. Yeah.
So if you see the history of last 30, 40 years, the people who have remained invested in the stock market have made a lot of money. Recently I was just going through one of the examples. The Bombay Stock Exchange came into existence in 1979 with 100 points.
Okay.
Today it is at 65,000.
Right.
Right. So in last 43 or 44 years, your money has grown 650 times. 650 times.
Right.
If you
Yeah.
if you had put 100 rupees there in 1979, it would have become 65,000 rupees today. And if you work out annualized growth, which we call it as CAGR, it is mind-boggling 16%. If you get 16% return on your investment every year, you have so much of money that you can't even think of.
So, sir, just bringing it to the generic concept, you have given a very best, or you have detailed it very well in a financial perspective. But I just wanted to ask, I have asked this question from a very generic perspective, right? How to put discipline in our daily life, right? If one wants to learn some new concept or one wants to learn some new skill, being disciplined in today's world is very very difficult thing. So, and there has been this fight between discipline and motivation, right? There's this tremendous fight between them. So what is how one can be disciplined? Because if we see in the military or in the army practices, we have our maybe our colonel or with our general who is always guiding us, who is there always just putting a stick to our head that we have to do this. Our tasks are very defined. So how to be disciplined, very in simple generic words, sir?
It's very difficult to remain disciplined in the financial markets. And if you have to remain disciplined, you have to do only two things. You have to control two of your emotions. One is the greed, second is the fear.
Okay.
If you can control these two emotions of greed and fear, you can be very, very disciplined and you can remain invested in the market for a very, very long time.
Right.
But unfortunately, most of us are not able to control these two emotions.
Right. So thank you, sir. It was lovely talking to you, and maybe this is it for the podcast. And we would love to have you pleasure, offline sometimes and discuss more about this podcast and more about financial market. And it was really nice talking with you. It's my pleasure to host you, sir. Any closing remarks you would like to give for our audience? It would be very helpful, sir.
No, it's a great pleasure for me to have a conversation with you. And I wish all the very best to all your viewers. With a simple advice, don't complicate your investments, keep it very simple. There are
Right.
much better chances of achieving your financial targets.
Right.
And investment is a very, very boring game. If you are looking for the excitement, it is not an investment. So keep doing it. It's a boring exercise, but it will get you a lot of money. Thank you very
Exactly.
much, everybody, for listening to me.
Thank you, sir. Thank you, everyone, for listening to this podcast. We are coming up with lots of new episodes. Stay with us and happy journey. Thank you.